The next question that I have here is, what category are we in as artists and service for the IRS?
On your business return, they ask, what kind of business are you? And this is so, if your return gets pulled for an audit, they're going to look and say, tattoo artists are considered a cash-intensive business. And so that's just a little red flag for the IRS. Saying these people make a lot of their money in cash, so there's not a lot of paper trail for us to, I mean, the great thing for the IRS about employees is they know exactly how much you're made because your boss has to tell them, and your boss has to withhold taxes. Employees have almost no way to fudge on their return. Cash-intensive businesses, there's an ocean of ways to fudge on the return. The IRS knows this. So that's what that number tells them. It doesn't mean it's a red flag for an audit. I mean, they don't have the opportunity to cheat enough to make it worth the IRS's while to go after them. So I mean, don't worry about an audit. Be honest, because you should be honest. And that's what that category means. It's just a way for the IRS. They're going to look and say, well, most people in this business category say maybe 40% of their income is offset by deductions. So if you filed a return and 90% of the income you reported is offset by deductions, that might get a letter from the IRS saying, show us. You know?
And that's because it doesn't match what others in your same industry are doing.
Because that's all the IRS can do, is they can compare you to other people who are like you, and then that's how they can judge whether or not you're being honest without looking at the paperwork. And again, most of the time, they don't want to look at the paperwork. They don't have the resources to look at the paperwork. Most audits that are done in this country, in fact, are what they call correspondent audits. Nobody sits down with you. They send you a letter and say, John, you reported a $4,000 trip to Los Angeles for a convention. Can you send us any background, any evidence of that trip? And if you send them in something that satisfies them, they'll say, fine. If you ignore it, they're going to come knock on your door.
Okay, gotcha.
You know, every year when I was at Kiplinger for those 40 years, we did your chances of an audit. And they are much higher if you have a Schedule C on your return than if you're an employee. But it was like maybe 1% of the people got audited, not 20%. They just don't have the resources. And thankfully, most people are honest, you know, so it's not necessary.